Hi there, good afternoon and welcome. You're watching the Mutual Fund Corner. I'm Mangla Malu. With me is Sumaira Abdi in the Mutual Fund Corner, answering all your mutual fund related queries. Before we do that, a quick look at the markets. Well, there has been a sell-off yet again. We're at the low point of the day. Any rally, any bit of recovery is being sold into, and that looks like the pressure is aggravating on the lower end. All the three frontline indices at the low point of the day. The Nifty almost losing about 100 points after losing almost 100 points yesterday as well. In fact, it's the weekly options expiry today and looks like it will be a weak options week this time for the markets, because over the last 1 week the Nifty has lost almost 250 odd points. Just as we speak, the bears are tightening their attack on the bulls, so we should have the 10,850 call up for you on your screen. A fair amount of positions taken out there on the short side, nearly 22 lakh shares, and 10,900 call as well, just as we speak, close to around 40 lakh shares written out there. So bears believe that any rally towards that 10,850 to 10,900 would look like it is being sold into. And as we speak, we're closer to the lower end of today's trading range. So first up, all the top stories, and then we hand it over to Sumaira, who will answer all your mutual fund queries with an expert. Market under pressure despite swaps for foreign portfolio investors. Brokers say arrest of a former finance minister may have created disquiet among foreign investors. HDFC Twins and Reliance as well as ICICI Bank trade under pressure. The mid-cap index underperforms. Indiabulls Housing takes it on the chin on the news that directors and employees have sold nearly 4 lakh shares in the open market in the last 1 week. DLF is another big casualty, and this despite management's clarification that the SC notice does not seek additional disclosures. Yes Bank too sucks in trade as investors ignore the removal of a key overhang. That's Rana Kapoor and his promoter entities repaying the mutual fund loans worth nearly 800 crore rupees, thereby unpledging their shares. Voices coming in from the North Block discourage talks of SOPs and stimulus. CEA brushes aside demand for GST cuts, says India needs investment reforms, say only some sectors slowing, not all companies. Can't expect the government SOPs in every slowdown. The former DEA Secretary Garg says that higher fiscal spending will push up rates and hurt companies. And candid as ever, Rajiv Bajaj says a 5 or 7% drop in sales can't be called a crisis. Adds that industry must look at its own shortcomings before asking the government for stimulus. So that was about the markets and the top stories that we were tracking this afternoon. With that, it's time to get on the mutual fund hat. We have Sumaira with us in the Mutual Fund Corner. Sumaira.
Mangalam, thanks very much for that. And joining me this afternoon is Morningstar India's Himanshu Srivastav. Hi, Himanshu. Good afternoon.
Hi, Sumaira.
And thanks much for joining in. So we've been getting in some very interesting queries. And our first one this afternoon also comes in from Ronak Rajpal. So he's 23 years old. So he's probably just begun his investment journey. Yeah. He wants to know what is better in terms of an investment, whether it's the PPF or the ELSs. Now, in terms of tax treatment, they both fall under ATC. But which would you recommend?
Right. So PPF and ELSs are two very different investment propositions altogether, and they offer a very different risk-reward profile as well. So it's very important to understand what are the benefit that an investor will get by investing in them. So PPF, Public Provident Fund, is an assured return scheme, but the major draw of that scheme is that the entire income or the return that an investor will generate is tax-free. On the ELS side, it's a market-linked instrument. So an investor gets a benefit of participating in the equity markets, at the same time saving tax on that as well. But ELSs have an upper edge in terms of liquidity. They have a lock-in period of 3 years, whereas PPF has a lock-in period of 15 years. But they do have intermittent liquidity provision at the start of the 7 year. But on the liquidity side, obviously, ELSs fare better. Now, what Mr. Ronak had an issue is that ELSs or equity funds now have long-term capital gain tax. That is there. So any investor who redeems his investment after 1 year, and if the capital gains are above 1 lakh, then they have to pay 10% as a capital gain tax. But that doesn't take the fact away from equities that they are one of the best income generators over the long term and have a higher potential of generating higher inflation-adjusted returns. So ELSs has to be a part of the portfolio. Given the kind of proposition that these two investment avenues offer to investors, they can continue to be a part of the same portfolio. So Mr. Ronak can have higher allocation to ELSs, say around 80 to 90%, and 10% to 15% can be allocated into PPF as well. So that is something that he can consider doing it.
But Himanshu, wouldn't you advocate actually selecting a product based on the purpose that it seeks to fill, right? PPF, by its very name, Public Provident Fund, is like a pension fund, right?
Right.
ELSS is an equity fund which has a tax advantage.
Right.
Should people not be looking at that function? Because if you're to debate ELSS and PPF, why not ELSS and an FD?
Right. Right. So PPF has a different feature altogether. One, obviously, it promotes long-term investing. The idea of having it as exempt is to make sure that people invest in that and secure their future. Right. The 15-year lock-in period.
So therefore, it should be PPF plus ELSS, right?
Exactly.
And not either or.
Either or. Exactly. So even if you are investing from a tax-saving purpose, right, PPF and ELSS can be a part of the same portfolio, and ideally they should be. So it's not that an investor invests only in ELSS and ignore PPF.
Yeah.
Right? They can be a part of the same portfolio.
All right, so that's the advice for you, Ronak. I hope you were listening in, and I hope you take Himanshu's advice. Up next, Mr. Vijay Gopalachari has written to us from Hyderabad. He's 40 years old, and he is a long-term investor. He has been investing in the Aditya Birla Sun Life Mid-Cap Fund, and he wants to know if he should continue investing. Now, a lot has been spoken about this mid-cap, small-cap space, etc. I'm not debating whether or not it's the time to be in a mid-cap fund, because in any case, it should be, a portion of somebody's portfolio. But is this the best in class?
I won't say that it's the best in class, but it's not a bad offering altogether. This is managed by Jayesh Gandhi, who's one of the seasoned managers in the mid-cap space. He has over 15 years of experience in the portfolio management space. I can understand the concern here. This fund has not been doing well for 1.5 years, but that doesn't mean that the fund is bad. 1.5 years of underperformance in a market when mid and small caps have been underperforming, this is quite understandable. But what I would recommend him to do is, as a part of his mid-cap portfolio, he can diversify a bit by adding few more mid-cap names to his portfolio. Right, that will help him diversify across managers and across investment styles, which is one of the prudent way of investing. Obviously, only if he has a risk appetite for that, and it's a part of his overall portfolio. What he can consider doing is he can consider some of the funds from the mid-cap space, like Franklin India Prima, SGFC mid-cap, DSP mid-cap. These are, again, one of the good funds within the mid-cap space in the industry, and he can consider investing in them and diversify his portfolio.
Okay, Himanshu, we're going to take a quick break from talking about mutual funds because the market has taken a sharp and sudden knock. So over to Mangalam to tell us what's weighing down on the market, Mangalam.
Absolutely, Sumera. There has been no letting up. Now the Nifty has broken 10,800 as well. In fact, it's broken the 10,783 mark, which was the low of the series. So now it is at the lows of the series. Let's see whether it finds any feet out there or not right now. And if it sustains below that, there could be some further sell-off and put unwinding. What is taking the Nifty lower right now? HDFC Bank. That's the one that should come up for you. A sharp knock seen on HDFC Bank. Among the higher weights on the index, we have ICICI Bank lower as well, and ITC from the consumer space has taken the index lower. Along with that, we have the Nifty Bank lower by about 500 points, as is the Sensex lower by close to around 450 points. So definitely a sharp sell-off taking place. The Nifty not only below 10,800, below the series low of 10,782 as well. We take a short break, come back, focus on the markets as well as answer some of your mutual fund queries.